Europe has a fantastic head start when it comes to regulation and regulatory clarity. It's just a unique place in the market globally at the moment. I think what Europe needs to do these days is just make sure that the innovation doesn't drop, be heads down on product, keep innovating, keep building. What's important to start off with is that stablecoin adoption does not mean dollarization. It's a fact that today's crypto markets are like 99% USD denominated. But that reflects global liquidity patterns, not policy design. And I think there's a clear opportunity to scale euro-denominated stablecoins. It was always clear from the start that 1 billion people on-chain, that would not necessarily happen directly on Coinbase's platform, but through an ecosystem. And so in this sort of logic, we've brought about this crypto as a service kind of offering. So that is directly working towards financial institutions, allowing them to weave crypto services into their offering.
Welcome, everyone. Welcome, Daniel, to the New Money Podcast. We've got Daniel Seifert with us today, who leads Coinbase Europe. It's a pleasure to have you on the show. And thanks for joining us.
Thank you. Thank you for having me.
I think we have an amazing episode prepped. I want to talk about your journey personally into crypto, into Coinbase. I want to talk about Europe in the broader Coinbase context, as well as on a macro level, what's happening on the regulatory side. And then we want to spend some time on the technology, right? Of course, stablecoins, crypto as a service, and all the exciting stuff that's going on in the industry right now. And we're excited to get your first-hand view. And we can kind of jump right in. I think when you joined Coinbase, I don't know if this is like the true timeline, but I saw on your LinkedIn you joined, I think, October 2022. If I recall right, FTX crashed November 2022. So how did that feel like jumping right in? And walk us through these first couple of weeks, I guess, that you had on the job.
Yeah, that's going to be one for the history books. Very memorable, right? I joined this. No, you got this precisely correct, right? I joined like 2 weeks before FTX imploded. And, you know, as you would kind of expect and imagine, kind of getting all sorts of crazy phone calls from my family, from my friends, from acquaintances in the business, kind of like telling me, like, what have you done? Like this is not real. Like, what have you done to your career? But I think, you know, I mean, like, if and surely you have as well, and many of the listeners here as well. I think if you've been observing crypto or in crypto for a while, you know, there's these kind of crazy ups and downs. And I think, you know, Brian Armstrong, he always says, it's never as good as it seems, but it's also never as bad as it seems.
I like that. And like unpack that a bit for us. Like how do you retain the team, right? I mean, you've just probably stepped into a running team. The equity is worth a fraction of what it was worth just a couple of months before. I think Coinbase went up after the IPO to like close to 100 billion and then went down to like closer to 10, which has to be like the most volatile public market asset ever in that specific period of time. What did you do kind of like operationally to keep things moving, right? And get things done?
Yeah, no, as you say, it was a tough time, right? And, you know, obviously this is now like much behind us, right? Even like 2-3 years, you know, at the time, I think, you know, many in the industry, right? But also including Coinbase was unfortunately going through a layoff, right? We had like grown from, I believe it was sort of 3,000 people globally to quickly over 5,000 or more. And then, you know, all of a sudden had to adjust downwards again, right? As kind of like the business volume and the activity kind of started to collapse, really, right? And as you say, like motivating the team, keeping everybody heads down. I think, you know, we had I think, you know, the positive, if you will, that we had at the time was, you know, Brian Armstrong, Coinbase had just sort of announced that it was going to invest big time globally, internationally. So outside of the United States, right, at the time they had hired 3 so-called managing directors, regional managing directors, you know, Fabio Plein, he's still with us, John O'Loughlin, he's still with us, and myself. And then we made a number of senior appointments across the region. And so I think, you know, there was a sense of, well, yeah, it's tough times, but there's also investment, right? And so I think, you know, people were sort of extra motivated that there was this big opportunity ahead of us in Europe.
Do you feel that it was an opportunity also to renew the talent base and like get rid of the tourists in a way and kind of like step out of it with a stronger core?
I don't know there are any tourists in crypto. It's certainly not for the faint-hearted. You know, like the markets go up like crazy, but the markets also go down like crazy. So I think, you know, especially at Coinbase, which is such a mission-driven company, right? Like the mission is to increase economic freedom all over the world. And people here, they really believe in what they do.
I've heard all about the amazing Coinbase talent. I've had Peter Stilwell on the show, I think earlier this year, who was an investor in Ivy and I think ran Coinbase UK for some time, and he was raving about the Coinbase talent as well. What makes it special in your opinion, and how did you guys build that talent base?
Yeah, it's and we've actually even recently called started an initiative that we call talent density, or raising the talent bar. So we want to make this the best place to work in the crypto industry, and we want to make everybody proud that they work at Coinbase. Also, even if and then when they do leave Coinbase, sort of looking back at this as being an outstanding experience and having worked with outstanding talent in the industry. And so far, it's succeeding, right? What we're doing is we've massively up-leveled all the interview processes. Even every single hire since a while now has to have sign-off from either Brian Armstrong or Emily Choi. Now, you could sort of think that, yeah, that possibly could slow down the hiring processes, but they've done it in quite a smart way, right? Such that there's a sort of 24-hour SLA. So meaning if there's neither like a thumbs up or thumbs down within 24 hours, it just kind of passes, right? So that keeps us fast, but with exceptional talent at the same time.
What percentage of the hires actually get approved and reviewed within the SLA?
That's a fantastic question. I actually don't know the numbers, but I can tell you that the outcome is a fantastic one.
Oh, I appreciate that. And if you think about revamping the hiring process, and I mean, we're thinking about these things all the time. So share your wisdom. What's like your favorite thing to ask or your favorite thing to test for that you think every good hiring process should really include?
What's important in a hiring process, I think, is that it sort of looks at a wholesome, complete picture around the candidate. So what we try to make sure is that, interviewers wouldn't necessarily ask the same questions, but they would get a very rounded picture of every single candidate.
I agree, right? This is the worst of like you send a guy through like 6 voodoo interviews and everyone asks the same question and comes out with a gut feeling assessment. I think that's probably really what you want to avoid. But yeah, so let's talk about Europe briefly, right? The area that you're kind of immediately accountable for. If you think into the future, right? If you think like 5 years in the future and Europe is like as big of a market for Coinbase as the United States is today, what are the 3 things that have happened to make that possible?
I think Europe has a fantastic head start when it comes to regulation and regulatory clarity. It's just a unique place in the market globally at the moment, right? I mean, you know that we introduced the MiCA regulation, and this year is kind of like when everybody's kind of getting their licenses and the transition period is happening. The US is fast catching up. You probably heard all about the Genius Act and the Clarity Act that will hopefully pass soon. I think, what Europe needs to do these days is just make sure that the innovation doesn't drop. So I would say, be heads down on product, keep innovating, keep building. This is the way forward.
How do you feel about MiCA, right? I mean, I feel that has been a bit of a vibe shift where Europe was like rightfully proud about MiCA, right? And being early to regulating and embracing digital assets. And now I feel the US is accelerating to such an extent that in a relative sense, we feel that we're kind of getting left behind again and losing our head start. Do you feel in a similar way, or what's your perception, like the relative positioning in the global markets?
Yeah, I think, if we sort of think about challenges and advantages or possible positive things about MiCA, right? I think, on the positive side is certainly MiCA provides Europe with a continent-wide rule book. So that's the first ever, right? Like previous, you had like all different single markets and all the different single regulators, but now you have a continent-wide rule book, right? So that gives firms like Coinbase the clarity and confidence to invest and scale. I think what's also important is it protects consumers while ensuring regulatory certainty. And that overall kind of enhances trust in digital assets, right? So if you think, 10 years back, right, this is pretty unregulated, pretty experimental. Nowadays, if you think Europe has more than 65 million people in Europe, and it's just for comparison, it's 52 million people in the United States, right? So the European market is already larger than the American market if you think about crypto adoption and people there. So it gives them the confidence to use this asset class, to keep investing, to keep using digital assets. And I think also Europe has become a benchmark for other regions. Like we've raised global standards on stablecoins, on disclosures, on custody. And those rules now help attract institutional players and accelerate innovation, right? I think at the same time, and this is a little bit the point I was trying to make, we have to be careful that, regulation is not only regulation, but there's also room for innovation, and that local players can kind of build exciting new product and the future of crypto.
It's actually really interesting. And I think like somewhat counterintuitive to me that we've got more users onboarded into crypto in Europe than the States. Does that correlate also to like higher trading activity and like higher deposits, or how do these metrics work?
Yeah, I think if you look at ownership and so forth, right, is hard to see. And those markets are very different. So they're very hard to compare. But I think, what you will see is that even within Europe, you will have differences. Certain markets like, let's say, Netherlands, they're very like front and center, right? I think they have something like recent surveys that I saw was like 16% crypto adoption across the population. Germany must be like a 13%. France, a little bit less, then they have like a 9%, right? So there's like an array of adoption across the region, but overall it's very crypto active.
Interesting. Talk us through a bit how you guys, and you specifically in your role, think about regulation and interfacing with regulators. I mean, before you joined Coinbase, you were at Solaris Bank, right? One of the OG German fintech companies and a real pioneer in this space, which in the end, and like at least outside in, struggled from a regulatory point of view, right? And where regulatory was a blocker to the further growth of that specific business, right? Did that shape, or like how did that shape in any way your approach to regulation in Coinbase coming in from there?
I've been always, so I think, if you sort of look at my trajectory and the way I've gone, I'm like very Gen X in in the sense that I started work out at McKinsey, right? So that was probably like the thing to do in the 2000s, and it was a little bit later than the 2000s, right? But at that time, and then after that, I worked for almost like 5 years at UBS, the globally leading wealth manager, right? Like so those are very, if you will, in a sense, very regulation forward, very traditional kind of businesses. So Solaris Bank for me was kind of like the journey into fintech, into startup or scale up, probably at that stage when I joined, and then I took over as managing director, one of the two managing directors of their subsidiary Solaris Digital Assets. And that was what really sort of got me started into crypto.
Interesting. What was Solaris Bank's strategy back then? Like, what did they do? I wasn't even aware that they had a digital assets business, actually.
Yeah, it was obviously Solaris and Solaris Bank, and then later rebranded to Solaris, was active in what's called embedded finance. So this is essentially, think of it as banking as a service. So, you're like anybody who wants to build some kind of fintech or fintech experience can work with Solaris to enable and quickly deploy and build a new financial product, like a regulated financial product. And Solaris at the time, the strategy was to put the account at the center. So sort of think of it like the classical current account, right? And then we would have built all these verticals on top. So think of it like borrowing, lending, et cetera, right? And then digital assets obviously was one of the hot verticals as well.
Was that kind of like, what came first, the Solaris experience or your personal interest in crypto for you?
Personal interest.
And what was the first asset you've ever bought?
Well, the first asset I ever bought was Bitcoin. I started out like probably many people, right? But I think the first experience, if you will, I guess like everybody has their sort of moments, right? Like it was very memorable. I was living in Switzerland at the time, and sort of Ethereum was the talk of the town in those days. And I think we watched Ethereum go from 30 cents to $3 to $30, and I think then everybody was freaking out.
Crazy. What's happening with Switzerland actually as a crypto hub? Is it still as active as it was, or what's the evolution over there?
Yeah, Switzerland has a very active crypto scene, and I think is following a very similar journey like you would see all across the region. So FINMA, the local regulator, they're actually sort of working on certain regulation proposals as well. And so I think this whole region is kind of aligning. And even globally, I would say, we're sort of aligning in terms of regulations. So if you look at the Genius Act, for example, there'll be a lot of similarities to what you see in MiCA.
One last regulatory question, and then we'll get into product and technology. What's your take? Where do you think we're going to land on the digital euro? And what would be your recommendation?
I would say, like, my immediate answer to this would be stablecoins. Stablecoins, like private sector developed stablecoins, are the only existing asset for settlement if you think about capital markets, right? Like that's the only thing that exists in practice, the only thing that works. And they do work, right? I mean, we had more than 40 trillion in volume in terms of transactions last year, right? In the last 12 months. And so if you think about a digital euro, right, I think there's totally there can be totally a scenario of coexistence, like digital euros could be used in wholesale markets. Absolutely, right? I don't think anybody's saying that they couldn't be. But I think it's just important to point out that, if you sort of come from what exists today and what works today, I think it's very clear.
And if you think about the future, like what would be your recommendation? Should the EU just scrap it and like bet on private markets like the US has done? Or do you think it's wise to like produce this in parallel?
I would probably, nobody's going to be against, call it experimentation or sort of you're building optionality, right? Like that's always very good, right? What I would say is we should just make sure that all this optionality continues to exist and we can see whatever works in practice to let it flourish.
That makes sense. We double click on the stablecoin phenomenon, which has been dominating the headlines over the last year or so now, I think, quite prominently. I want to talk about a couple of like specific subsegments of the broader stablecoin idea. Right? Obviously, Circle went public, an amazing success. Coinbase, obviously a big part of that story, both historically and economically. How do you feel about non-US dollar denominated stablecoins? I mean, Circle has Euro C. I think these assets have not performed amazingly well so far. Maybe I'm wrong, but tell me about what's still holding them back and where do you see these products going?
Yeah, fascinating question and really important question for our region also, I would say. I think what's important to start off with is that stablecoin adoption does not mean dollarization. Right. I think, people often, it's a fact that today's crypto markets are like 99% USD denominated, but that reflects global liquidity patterns, not policy design. Right? And I think there's a clear opportunity to scale euro-denominated stablecoins. Back to your point, that can be alongside a future wholesale digital euro. We'll see, right? But I think it would be important to scale euro-denominated stablecoins as a key settlement asset for EU capital markets. There's maybe a little like side note or parenthesis if we start to go into like a tangent there, right? There's this ongoing debate around the multi-issuance model, right? So the fact that a tokenized dollar can be issued by entities outside the European Union. But I think we've seen risk mitigation tools that already exist. We can have EU-only redemption. We can have reserve rebalancing mechanisms. There's even today already volume reporting under MiCA. So I think there's already strong safeguards and further equivalence tests that are being debated at the moment. We don't think they're necessary. So we support the European Commission in validating the multi-issuance model as long as these sort of risk mitigation measures are put in place, right? But I think like a strong euro-denominated stablecoin, very important for the future of Europe.
And you think the use case is really capital market settlement? Because I think like the initial use case for stablecoin, like crypto trading, right? And that's USD denominated. I think then the killer app, people are betting on cross-border payments. Probably also largely USD denominated use case, right? I mean, I think there are corridors, but still like the biggest trading pairs, I guess, are USD trading pairs. And then what you're saying is like for the euro-denominated stablecoins, the killer use case will be kind of like European capital market settlement. Is that correct?
No, I'm not necessarily saying it'll be the killer use case, but I just think that it's a very important component, right? Like bank balance sheet lending can only get us so far. And I mean, you Ferdinand, like you're running a startup, like hopefully soon a scale-up. And like you'll come to the moment when you need that kind of large amount of capital. And we see this in like, sectors like artificial intelligence, right? That need huge amounts of capital investment, right? And so I think what we're saying is that capital markets in Europe, they should get harmonized, come together. And I think in order to develop that depth, right, we will want to see euro-denominated markets, capital markets and capital formation in Europe, right? But I think that's only one area, right? Like what you've been talking about. So for example, settlement of global commerce and global trade. Certainly huge amounts of global trade are also being conducted in euros nowadays, right? Like, so all these could also be at the same time done in Euro C. So the Circle issued euro, right? Because if you think this is nowadays, it's sub-second, sub-cent kind of transfers, doesn't matter you're transferring €1 or you're transferring 100. This settles instantaneously and it's permissionless and it only costs you a fraction of what a global transaction might cost you, right? I've recently done one transaction where I sent money from the United States to Europe. It cost me $40 just for a single transaction. So if you see, it's kind of prohibitive. Even if I was to go below $40, I'd be burning money, right?
Totally. And we are probably like top 1% best bank people in the world, right? So I'm obviously super bought into that thesis. Sometimes I wonder, are we like reducing the complexity a bit too much? As in like, okay, like obviously the payment rail is like far superior, right? You can move the money in real time globally. That's amazing. The cross-border payment has though, like these dual cost drivers, right? I have the payment rate, and on the FX, I think it's much less clear to me how cost savings will actually be realized because liquidity is just much thinner still, right? How do you feel about that in terms of like maybe the challenges that we're seeing if we actually want to deliver like cost savings at scale for like wholesale FX cross-border transactions?
Fascinating question, right? And I think, we've seen a number of players in this space. So, think Revolut, TransferWise, and so forth that kind of like attack this space and obviously try to improve things based on where they were, let's say 10 years ago or 20 years ago. And I do believe there's a huge opportunity to go even beyond that, right? So you do have, so on places, on exchanges like Coinbase, for example, right? You would have a, pick the example, Euro-C, USDC trade pair, right? And I think there's certain days when these kind of trade pairs already exhibit deeper liquidity or thinner spreads, I should actually say, than I get on some of the other players or some of the other places where I could be getting my dollars, I could be getting my euros, right? So I think the path forward or the vision for the future certainly must be that we increase the liquidity on these places. And if you take this even one more step forward, right, make it permissionless, right? Make it on decentralized exchanges, make it on Base, and trade it, basically swap your money from one currency to another one instantaneously, permissionless, globally, with the thinnest spreads possible.
Stablecoin, another one. What's happening with the GBP-denominated stablecoin? Where are we on that one?
Yeah, I wish we were further ahead, right? Certainly, we don't have the right regulation or regulatory clarity in the United Kingdom today that we would love to have. I mean, obviously, the government is doing a great job and they're sort of working on it, and together with the regulators, it's not yet out there, but hopefully we'll see movement soon.
And a third stablecoin pointer, we all saw the Citi partnership. Congratulations. Crypto as a service, stablecoin as a service. And what's the thesis for you guys? How are you feeling about it? And what can we expect to see in the next year or so in that space?
Yeah, no, fascinating, and obviously very proud of this partnership. And I think it just sort of goes to show how much crypto has become kind of like a force of nature and a sort of adult kind of movement, right? So crypto as a service, the Citi collaboration, right? I'll bring this back to the Coinbase mission of increasing economic freedom worldwide, globally. And I think at some stage we sort of had that ambition that we wanted to have 10 million people on chain. Then we said, okay, 100 million people on chain. And then once that was kind of achieved, then, okay, let's bring 1 billion people on chain, right? And I think it was always clear from the start that 1 billion people on chain, that would not necessarily happen directly on Coinbase's platform, but through an ecosystem, right? And so we kind of pivoted the company to, okay, we got to build tools and we got to build foundations that, other people who were building startups or maybe very traditional institutional financial institutions can also be using, right? And so in this sort of logic, we've brought about this crypto as a service kind of offering. So that is directly working towards financial institutions, allowing them to weave crypto services into their offering. And what it's going to do is just going to grow the pie overall for everybody and bring more people on chain.
Who do you feel is like the ideal customer for that? Are these the largest banks in the world, like Citi? Are these nimble fintechs that want to launch fast? Like, who are you most excited about serving?
I think this has evolved over time as well, right? I think in few years back, right, this would have been almost like very crypto native or crypto forward kind of institutions. The first ever days was sort of market makers and hedge funds, and then became crypto VCs, and then maybe, was a bit more like in the direction of family offices and so forth, right? It sort of went up the curve, right? To now this day, when we have these amazing collaborations with these GSIBs, so globally systemic banks like Citibank, for example. So I think, it just goes to show how far we've come.
So Daniel, we're all very bullish. We're all very excited. I am too. I am drinking that Kool-Aid. What are you afraid of? What can go wrong in the broader stablecoin and crypto story from here?
I mean, we definitely should always watch out for, and we've been saying this for a long time, right? For how we are building product. I think, for a very, very, like if you sort of roll back 10 years, it was incredibly difficult to use any of this, right? And kind of like even in DeFi summer, lots of people got very excited, but, it was like very complicated to use. And we've gotten better at this, right? And, obviously, the thesis of the DeFi mullet, which has sort of Fintech in the front, DeFi in the back, right? And I think we see more and more of that. But we certainly should not rest on our laurels. And there's still so much more to do in terms of building better product. And that is just so much more easy to use and fully trusted in order to make this become a reality.
And I think it won't be long until we see banks on DeFi, right? I think it's quasi inevitable. If you if we tie it back up as we're wrapping up the convo and like think about the very beginning where we talked about FTX, do you think stuff like that will happen again? Like where you mentioned like, hey, crypto is volatile. This is like, it's part of the nature of the asset class. I have the feeling, I have like genuine feeling it won't. I think it's institutionalized to such an extent where even the worst crashes do not spike prices as aggressively anymore and activity anymore. What's your take here?
I would probably say if I sort of take a view a little bit beyond just the crypto sector, right? If you think about financial services in general, we've seen a few crashes, right? Even, probably in the 1920s, 2090s, 30s, when in the US they made the Glass-Steagall Act after the sort of big meltdown in the 30s, they probably thought, great, this is it, right? Like we've now mastered it, and then fast forward a few 50 or 100 years, you still have financial crises. Like I personally remember the dot-com crash. I remember 2007, 2008. So, I certainly don't want to rule out that there could be any further sort of ones. Right?
Oh, I appreciate that. Let's do a quick round of quickfire questions. I've got 4 or 5 prepared. What's the most underrated crypto hub in Europe today?
Might be the Czech Republic.
Interesting. What a contrarian take. Explain that to us briefly.
Well, it's just the amount of time. So you still remember probably Trezor, when there were hardware wallets, right? And there was sort of Ledger in France, right? And Trezor in the Czech Republic.
Yeah.
So they have incredible talent and they have like a lot of people working on these kind of things, right? So, well, you asked about underrated, right? So
if you could change one thing about MiCA overnight, what would you change?
Probably allow payment of interest on stablecoins.
Useful. Didn't talk about that. Interesting one, actually. But yes, which one of your competitors do you respect most?
There's a lot of them that I respect a lot. I think, there's maybe if we sort of segment into global players and regional players, right? I think on the side of the global players is just incredible to see what kind of businesses they've built over partially just a few years, right? So you got to respect that, just the scale and the size of it. And then if you think about regional players, right, I think, it's fascinating and very heartening to see that sort of Europe has not left its technology heft. We still got it in us to innovate, and we see this in these regional players.
Appreciate the diplomatic answer. I will leave it at that. If you had to build non-crypto fintech business as an exec, which one would you pick?
Non-crypto fintech. If I can say that artificial intelligence kind of counts as fintech, then it would be certainly that.
I appreciate that. Hey, Daniel, thank you so much for joining us today. It was great to have you on the show. And to everyone who listens, we do this every week, and you can find us on Spotify.